In today's video, I'm sharing my exact trade plan for gold, silver, and the US dollar. And you're going to want to watch this video through its entirety because I have some really great stuff for you. Plus, we could see some relief from gold and silver here over the coming hours, and I'll show you exactly why in this video. So my name is Justin Bennett, full-time trader and founder of Daily Price Action. As always, all this is my opinion only and not financial advice. So let's get right into it, looking at the weekly time frame here for gold. So what we've talked about over the past few weeks going into FOMC was the fact that going into FOMC, this was the first weekly close below the yearly open for gold. Okay, so this area up here around 43.33, this was the resistance level I mentioned before FOMC. And as you can see, this worked out really well for anybody getting short up here. And furthermore too, if you take a look at this on the hourly, right, this is the retest up here, even though this looks pretty choppy through here, and there was actually a signal through here that we talked about at length. So you had the BOS above these highs back here. This was the low back here I was looking to be taken out. You can see it was taken out, change of character there. And guess what was retested right after FOMC. Okay, so this up here was a great short. We also talked about this in Discord in real time. Now, if you guys want to see exactly how I trade SMC full time, including what I just showed you, then check out the link right here on the screen. That's going to provide you with a free SMC training that shows you my exact strategy step by step. So it's completely free. All you have to do is click that link, enter your name, email address, and get access to 2 hours of content. So for gold right now, let's take a look here. I don't want to talk too much about what happened before. I want to talk about what's happening right now and what could happen here this week. So first of all, you can see if we look at the daily chart, you can see we are breaking to fresh lows here. So this low right here, we have to go back to basically November of last year to find previous lows for gold. Now, this area around 38.95 is the one that I've said for a while now, for the last few weeks, to keep an eye on the way down, okay? So you can see that right back here, we have these highs back here, we have this low. So 38.95 is likely to serve as support on the way down. So we haven't seen that tested just yet. However, I do think we could see a little bit of relief here from gold and silver on this drop simply because of what the US dollar is doing. And I'll get to that here in a moment. So first of all, if we look at the 1 hour time frame, right, we know that this level down here is likely to be tested over the coming days and weeks, right? No guarantee of that, but given the trend, given the lower highs and lower lows, also that this is a key level going back there toward late 2025, we are likely to see a retest down here. But I don't think, this is not financial advice, but I don't think now is the time to chase this market simply because we are trading at the lows. And also, if you look at the 1 hour time frame, we have imbalances like this back here. So we have this series of candles right back here, right around 40.60, 40.80, that could come into play as an area that gold wants to target, okay, or mitigate before we potentially get a continuation of this trend. So in my opinion, looking at or looking for shorts down here at these current levels doesn't make a lot of sense. I would like to see some relief here first, possibly too. If looking at the 4 hour time frame, this was the first 4 hour close here below this congestion back here. So again, 40.60 to 40.80, in my opinion, is going to be an area to watch. Obviously, we need a lower time frame change of character, or at least I do, to confirm the short to get short here within this trend. Okay, so longer term though, guys, what I've said here for the past few weeks, has been pretty spot on. I mean, back here, what I talked about was that we took out this low here on those intraday charts. Okay, so we took out the low, and back here we were looking for lower highs and lower lows to develop on the mitigation of this imbalance. And then, a few weeks ago too, I mentioned this area between 3,400 and 3,500 as a possible longer term target. And so far, it does kind of seem like we're on track to reach that area. Okay. So no guarantee of that, of course, but given the trend that we've seen here recently, and also what's happening with the US dollar, that does seem more likely now than it did a few weeks ago. Okay, so I am looking for shorts here. However, again, I am looking also for some relief in the near term in order to get short. Now for silver, let's talk about this market here, because what we talked about going into FOMC, if we look at the 5-day time frame, really simple. I won't spend a lot of time on this, but you can see the 5-day chart here, really simple. This is the yearly open for silver. Okay, back here at these lows, and you can see we tested this level exactly. If you go back there and watch that video, I mean, this is where silver was trading going into FOMC. I said this was resistance and silver could be in trouble. And sure enough, we've seen the market just sell off from that level. And before we go on, guys, if you are enjoying this content, if you find these videos helpful, which hopefully you have, because I've really been nailing these moves all year, then be sure to leave your comment below to show your love and support for this video. So for silver, guys, we are seeing it break below this level here. So we talked about this last time. right around 61.64. So you can see we have this low back here. Okay, closing price back here. We've got this low and also this one. So right now we are seeing it break below those lows. However, like I mentioned with gold, we could see some relief here from this market, mostly because of what the US dollar is doing, but also you can see that on something like a 1 hour time frame, we have a few things to consider. So the very first thing is you have this descending channel off of these highs and lows. Whether or not this was a retest down here is unclear, but the bottom line is down here is not where you want to be looking for shorts in a market like this. Okay, you want to be looking for shorts after you see some relief, right? So given that, and also given the fact that like gold, we have this imbalance, this pocket up here, okay, right around $61, I would like to see silver show some relief over the coming, let's say 24 to 48 hours back here into these lows, possibly the top of this channel. And then from there, look for shorts, okay, up here in this area, following the mitigation of this imbalance, okay? Looking for shorts down here, in my opinion, is always a bad idea. Again, you look at the structure here from this market, right? Do you want to be looking for shorts here? The answer is no. I mean, you want to be looking for shorts again after some relief. So with that in mind, I'm looking at this area around 61. Obviously, again, a low time frame change of character will be key there for me to look for shorts. Okay, and obviously, if we were to see silver come back up here and reclaim levels like 61, 64, like these lows back here, if we were to see it break above here, back above here, then that could, of course, be bullish for silver and also gold. But right now, the trend is intact, so there's no reason to be bullish on this market. Now, let's take a look here finally at the DXY, the US dollar index, and I'll show you why I think we could see some relief for gold and silver in the near term. And it all has to do with the US dollar. So I want to start by saying that, first of all, anything I mentioned here with the DXY is not bearish. You have to understand that there are trends within trends, right? So when we talk about the potential for a US dollar pullback, in my opinion, there is nothing to be bearish on here. It's simply a matter of the market moving back after a huge run up here, moving back to mitigate some inefficiencies, right? So you have longs piling into US dollar positions, and the market often comes back to mitigate areas like this inefficiency back here. So this is the 4 hour time frame, guys. And as you saw too from the daily, we've talked about this before, but you can see where we have this change of character that occurred way back here in March. This is why I was looking for a higher low down here. And furthermore too, my target remains this area really between 102.50 up toward about 103 over the coming weeks. But in the near term, what I think we could see from the DXY is, if we look at this here, right, we have a breakout from the top of this channel back here. And furthermore too, if you move in on the 4 hour time frame and look at these candles right back here, what you're going to notice is a 2 candle pattern that both are inefficiencies. Okay, so what I'm referring to here is this candle and this candle. And both of these, neither of these had a retrace into them. So basically, if we map this out here, what I want to see from the US dollar is a move below 101.3. I want to see the market move below here and into this pocket. Now, this right here is the top of that channel that we broke out from. So in a roundabout way, guys, this kind of will be key for the US dollar to hold, for the DXY to hold. If we were to see the market close below here on the high timeframes, then I think we could actually be in for a larger US dollar pullback. But for now, again, there's no reason to suspect that, okay? And this is the difference between trading what is on the chart versus what's, trading what you want to see happen or what you think might happen. There are a lot of people out there who are still bearish on the US dollar. Why? I have no idea. Just because you look at the weekly time frame here, like we've talked about on this channel, right? Going to a 2-week time frame, moving all the way out here, the market is coming off of that 2011 channel support. And furthermore, too, last week, if we go to a weekly, you can see where last week was the highest weekly close in 13 months. So all this is so far, in my opinion, on the 4 hour time frame is a short-term pullback. Okay, it's a retracement here within an established uptrend. Okay, so this area down here between really 101.2, 101.3, this is going to be support for the DXY. Now, again, there's no guarantee that the market bounces from here and continues. We could, okay, there is a scenario where we get the market actually closing back below here, coming back in this area to mitigate this region, and then possibly continuing higher, okay? So just keep that in mind. What is going to be key here, like I always talk about, is what we get on the lower time frame. So if you go into a 5-minute time frame, right, here is that region down here. So between 101.3 and really 101.15, I'll say, if we come down here and you can see the lower highs and lower lows that are developing, right? So if we come down here and just continue this pattern lower, And then from down here, okay, we get this, right? And we get that change of character. Well, that right there is your confirmation that this is likely to hold. Now, if we don't get that, okay, especially on something like a 15-minute time frame, which gives you a little bit more confidence, if we don't get that and we just start to knife right through this area, then that could be your indication that we are looking at a larger US dollar pullback. Now, all of this matters if you're trading gold and silver because obviously the US dollar and gold tend to move inversely to one another. Just keep in mind though, guys, I am not saying to go out and buy gold. I am not saying to go out and short the US dollar. That is not the point here. The trend for gold is bearish, okay? Period. There's no way on this chart you're looking at this here and saying that this market is now bullish, okay? You could speculate and say that we're likely to get a bounce from here, sure, but that's just a speculation. There's nothing on this chart, whether you're looking at the 4 hour, the 1 hour, even like the 30-minute time frame. I mean, there's nothing on this chart that shows you that a bottom is in for gold. Okay, so for me at least, what I'm looking for is temporary US dollar weakness down here into this imbalance. Okay, and then from there, it's going to be a matter of what we get on the lower time frames. So during this US dollar pullback, possibly some relief here for gold. Again, I am not buying gold. I am not bullish on gold. I am looking for shorts, but I would like to see some relief here for gold up toward about 40.60, 40.80 before looking for shorts. Okay, whether we get it or not, we'll have to wait and see. But as always, I will be sure to update VIP members in Discord as to any trades I take. So I truly hope this video has helped. If it has, then be sure to subscribe to the channel. Also check out that free SMC training on the screen right here. It is completely free and it will show you how I trade SMC full time. So until next time, trade well. I will talk to you again tomorrow.